Hello traders, it is Wednesday, March 5th, and I'm trying to get a quick video out to you. Today's theme is not again. Not again what? We almost had a great opportunity set up for us on the swing side. We've really been patient. We've really been waiting for that opportunity to set up. I'm going to get into that in just a minute. FSLR, that was my most recent pick. That's how all these videos start out. I review my previous pick so that you can see how it did. Over time, you're able to see that this systematic trading approach really works. If you've been making some money on these trades, please give the video a thumbs up. Please leave some comments, and by all means, subscribe to the YouTube channel because I'm going to do some of these quick videos. I don't know when I'm going to have a chance to get them out. If you have your notifications on, you'll never miss a beat. So, FSLR. This came out in my Sunday video, and you can see the price action here. This is what happened on Monday, and we were looking for the market to gap higher Monday morning and to test the 50-day moving average. I thought the market would test it for a day or two, but that didn't happen. It got smacked down right away. And if we had Monday and Tuesday to kind of evaluate and to see the resistance in the market, then we for sure would have been putting on more swing trading positions on a longer term basis because that would have been an excellent entry point for us, and it would have been proof that there is selling pressure and resistance, but we didn't get that. And you can see, let's go into the 15-minute chart so we can see what the market did. And so this is the price action from Monday. You can see this gap up and then the immediate sell-off as that 50-day moving average was tested. So once we get this smackdown from the market, hey, 50-day moving average rejection. All right, how's that FSLR trade look? Well, this is the price action on the open Monday, so you kind of wait and make sure that the market's not going to be able to go back and test that 50-day moving average. When it becomes apparent that it's not going to be able to do that, you've got an excellent shorting opportunity. Let's call it somewhere around the 141 level. And look at that. Stock sold off all the way to 127.50. That was a beautiful short. I hope some of you got on board that trade. So let's take a look at the market, see what it's doing in here. Lots of movement back and forth. This is typical of what you see when the market is transitioning, because from a longer term uptrend, you have a market that still has buyers. They've been conditioned to buy the dip, buy the dip, buy the dip. Well, eventually that bid is exhausted and you start to see sellers take control. And we've had additional economic data points that have suggested more weakness. We'll get into that in just a second. And if we go into the longer term chart, I'm going to take off the trade signals here and then we'll have more clarity on the chart. So this is the price action that we saw Monday. If you recall, Friday we had this nasty big long sell-off. By the way, please go back and watch my Sunday video. Don't take anything that I say as gospel. Don't take anything that anyone else has to say as gospel. Go back and verify. I'd mentioned to you that after a really big, nasty decline, like we saw right in there on Friday, that we were likely to get a bounce higher. Okay, so we get this sell-off right in here, and then we get this reprieve on Friday. You can see this long green candle. Let's go into a 15-minute chart so we can look at it in more detail. And so here's actually what happened is we get this gigantic market sell-off, and then right here, this is the sell-off on Thursday. Right here on Friday, we start probing for support, This is a 15-minute chart. And this is the danger of being short and overstaying your welcome. Look at this rally from the low, let's call it 583, all the way up to the close of 595. That is like a 125 point S&P 500 move in the matter of a couple of hours. So that shows us that buyers have some interest and that this oversold condition was going to spark some short covering. So in my video on Sunday, I referenced this and I said, follow through is likely because buyers are going to look at this support and they're going to be emboldened. So we're going to test the 50-day moving average. Market opens up and smacka. Right away, it is rejected off of that 50-day moving average, and then we see continued selling pressure the rest of the day. So this is what happened on Monday. Tuesday, yesterday, we get continued sell-off, and then what? We get another massive rally. And you can see from that low, which was around, call it 573, all the way up to the high of 585, we've got another 120 point S&P 500 move. If you're a day trader, yeehaw! This is the best possible trading environment for day traders because you're getting these really big movements intraday. I love it. Unfortunately, for swing trading, it's been difficult because we've got these gigantic swings. And so here at the 50-day moving average, I really was hoping that we would spend Monday poking through that 50-day moving average and not able to get through it. And then Tuesday, kind of poke at it a little bit and then start to back off from it. That would have given us a day and a half to start entering some bearish swing positions. And this type of rally that's sustained and perhaps even moving just a little bit higher gives us lots of information because we can take a look at stocks like FSLR and we can notice that, even though the market's up, we're starting to see this stock deteriorate a little bit and it's starting to tick lower, even with the market moving higher. That is relative weakness, and that is a sign that sellers are aggressive. They are shorting or selling their long position in this stock. And as soon as the market starts to roll over, we're already in that short position. Market starts to sell off. We see the stock ka-chunk crack down, add to the position. We see the market move a little bit lower, ka-chunk, add to the position. Constant confirmation, and we're in at a good price. So our average cost on that short is much higher than the current price, and that's what gives us the confidence to add to that position on confirmation. So we've got a long way that the market can fall from that 50-day moving average. And there's your bounce Friday. There's your gap up on Monday morning. There's your test of the 50-day moving average on the open. Barely even hit it, and whack! Look at that sell-off. Now we know, based on what we've seen over the course of the last 2 weeks, that for sure there is selling pressure, and for sure the market is starting to top out. So what do we do now? It's fallen so far. We know that when the market falls far, the chances of a bounce are greater. Yes, that's true. And we're right near that 200-day moving average. Today we got ISM services came out. It was a good number, I believe 53.1. And that was better than I had expected because the flash PMI that came out 2 weeks ago had a services component that fell into contraction territory. So I was looking for a low number here, wasn't trading it. I was just waiting to see how it came out. We have the Atlanta Fed revised their Q1 GDP expectations minus 2.8. They were at minus 1.5. So you add tariffs into that equation, all sorts of guidance and commentary coming out from corporations. We're seeing weakness globally. Central banks around the globe have been cutting rates. They are more fearful of a reduction or a decrease in economic activity than they are with inflation. And we are seeing inflation tick higher, and we had ISM manufacturing come out Monday. It was in line with expectations, barely in expansion territory, but it was the manufacturing prices in that survey that came in really hot. So we've got the Fed in 2 weeks. The market has started to see some signs of economic weakness. We had initial jobless claims pop up last week. ADP came in this morning. Only 77,000 new jobs created in the private sector during the month of February. 146,000 expected. That was a pretty big whiff, and it does not bode well for the unemployment report on Friday. So in the early stages of the market rolling over like it's doing right now, you're still going to have buyers in there, and you're still going to have the bad news is good news crowd. So if they hear that the Fed might possibly be easing in 2 weeks or moving up their timetable for that, you could see a sell-off down to the 200-day moving average. I believe the 200-day moving average will be tested. And so you poke and you spend a little bit of time down here and you start to build some support. That could coincide with I don't want to say dovish FOMC statement, but at least it won't be as hawkish, and perhaps they will see enough signs that they are ready to cut rates, and that might be when you get this bounce higher. So if you've been patiently waiting as a swing trader, it's the hardest part of trading. We had our opportunity set up on Monday. We just needed an extra day and a half to start getting into those positions, and we never got the chance. It's okay. We know now that there's lots of selling pressure, and we know there's buying pressure, so we're going to get plenty of movement. Don't feel like the train's left the station and you're never going to get another chance, because the next big opportunity will come on a failed bounce that cannot get through the 100-day moving average, and we're going to watch the market struggle and struggle and struggle to get through that 100-day moving average, and when it does, we will have our lower high double top, and that is when we will be able to take some bearish longer term swing positions. So that's how I see things playing out. I'm going to keep this video short. Make sure that you're keeping an eye on initial jobless claims tomorrow, Thursday. That'll give you an idea how Friday's report might come out. I'm looking for a fairly weak number and possibly a hot wage component. That would be double whammy. So then we test the 200-day moving average. So I'm going to be highlighting a short pick, and I'm going to be going through my lists here, and CRWD looks like a pretty decent short to me. And here's what I'm going to be watching for. You can see on a D1 basis that the company announced earnings after the close yesterday. And you can see this gap down here. I want to see that 100-day moving average preserved. We've had relative weakness here. We had a compression. Stock was treading water at the 50-day moving average and a VWAP-E. Wham! Nice decline. It has rallied off of the low. Okay, so maybe it got a little bit oversold. What I'll be looking for now is, let's go into the M5 and see what the market's doing. Whole lot of nothing after some big volatility. This is, look where the price is. This is an inside day, right at about where VWAP closed the previous day. So notice how we are just chopping above and below that VWAP. This is an inside day. You can see the volume is relatively light, although we've seen really nice volume coming into the market. So we got lots of potential price movement here. So this is just a day of rest. We got news Thursday and Friday. Thursday could be a little lackluster too ahead of the jobs report. So right now I am looking for a brief pause here. Any kind of rally. I'm going to be looking for stocks with relative weakness because I believe the jobs report on Friday will be pretty soft, and I'll be looking for a market pullback, and I'll be looking for those stocks to also follow suit. Best thing you can do is just kind of day trade right now. Look for these big moves and don't get married to one side or the other. You can see when you get a big move like this and you start to find support, you look for that release off of the low to get through VWAP here. You're going to have a nice move higher. If this starts to get a little climaxy with long stacked green candles and a little parabolic feel to it, then you can expect to see price movement the other way. Bearish engulfing candle off the high of the day. That's where you'd start taking a short, add to the short, and then you've got a nice move the other way. So lots of movement both ways. Don't get married to one side or the other. Focus on day trading. CRWD. I want to see the market rally, rally, rally. And I want to see CRWD hold that 100-day moving average. Why is this so important? Because 75% of all stocks follow the market. When you've got a weak earnings reaction, when you have a breach of horizontal support, when you have a breach of a 100-day moving average, and the market starts to go higher, you would expect that if this is grossly oversold, that the stock is going to be easily able to get above that 100-day moving average. And if it can't, it's going to be a sign of continued selling pressure. So that when the market does roll over, we know that that 100-day moving average has held and that we are likely to visit that 200-day moving average. So Pete, what happens if the stock gets into the gap here and it starts to fill in some of that gap while the market goes higher? If that happens, we're not shorting CRWD. That tells us that the stock is oversold. The reaction was overdramatic from the earnings announcement, and that sellers are not that aggressive, okay? We don't know that right now. So we want to see this stock hold this resistance level when the market is moving higher. And if the market doesn't move higher, we still don't really have that confirmation. So we need a little pop higher in the market, and we need to see a lid on that stock at the 100-day moving average. So because the market's been moving all over the place both ways, I am going to give you a long to take a look at as well. And I'm going to go into trying to think of which search this might have been on. I'm just going to cut to the quick. It was in one of the searches. I noticed it. I thought, that looks pretty good. APP is a stock that I like. What do I like about that? This thing has fallen on hard times. Well, this is a compression. You can see that there's been longer term support here. It's bounced off of the 100-day moving average a few times. That means that there's support. When has it done that? It has held that 100-day moving average when the market has had its head handed to it. So during heavy market selling, the stock is able to hold that support level. That tells me that buyers are interested. That tells me that should the market go into rally mode, I am expecting this stock to move higher. 15-minute chart, overlay, SPY. Let's see what the stock has been doing relative to the market. Zoom out a little bit. You can see nice big drop in the stock right there. Market heading lower, stock heading lower. Now all of a sudden you've got this horizontal support. Market heading down. See the gray line? That's the market. Market heading down. Sell, sell, sell. Sell, sell, sell. Sell, sell, sell. What's the stock doing? Bye, bye, bye. Bye, bye, bye. Bye, bye, bye. Stock is holding that support level. Market rallies right here. What does the stock rally? Nice gap up. Market sells off. What does the stock do? It holds its gains. Market pulls back sharply. What does the stock do? Pulls back a little bit, finds support. It starts to rally. Market rally here. Where is the stock finding support? Way before the market. And look, it participated beautifully in that market rally. Market down today. What's the stock doing? Barely changed. It's got some relative strength. So if we see a big positive reaction to the jobs report, and if we're bouncing above this 200-day moving average, and if we can get above the open from Tuesday, then it's kind of all systems go. That would also be the high from today. So let's drop an alert line. These are your marching orders, folks. If you can get above that level on the jobs report and let me give you a actual number, let's call it 580. If the market can get above 580 after the jobs report, and we're feeling pretty comfortable that the price action and the volume look good, that the market is set to bounce, we want to see APP participate in that rally, and by all means, we want to take out the high from yesterday, which was Tuesday, which is going to put us right at about that, let's call it 341 level, right in there. If all of these pieces play out, then we'll have a nice stock to look at on the upside, and we don't have to worry about the rug getting pulled out from under us, because we know that buyers have been supporting the stock when the market has been selling off hard. The Wednesday live events, I'm going to try and do one a month. It's about all I have time for right now. But Harry is still doing his live events. He's doing them on Twitter, X. And it's audio only, but he's doing them for about an hour, hour and a half. I'm going to have that link in the description of this video. So please make sure to click that link. Harry's got great analysis. He's going to do a Q&A. So it'll be a great way for you to see what his thoughts are on a relatively lackluster day. And we'll take one more look at the market. And you can see it's doing a whole lot of nothing right now. So yes, please join Harry during his live event. It's going to be today. It's going to be in about 2 hours or so. So watch for that. We will do a video on Sunday. Thanks so much for watching. Please turn on your notifications, subscribe to the YouTube channel, and we will see you then. Trade well.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy.